Hey, what's up everybody, and welcome back to another video. In today's video, I decided to do a quick little lesson on the different time frames. Trading on different time frames, such as the 1 minute, the 5 minute, 15, 30, hourly, the daily, even the weekly. Go over extended time frames, short-term time frames, when to use them, when not to use them, when they're helpful, and honestly the best that you can get out of each individual one. If you liked the video today, be sure to give it a thumbs up. Appreciate the support, and make sure to hit that subscribe button so you know when either I'm going live or I'm posting a new video for you guys. So let's get right into it. So I decided to do just a screen share again today so you guys could see a full screen picture of these charts and make it a little easier to read and, won't be so distracting. So I want to start out with USEA. That was one of the bigger runners from Friday. If you look at it, this is the 1 minute to start. You can see it looks like it has some very jagged edges, looks very wicky, and these are like breaking the chart down in a very micro way. So you're almost looking at it at a very, very tight level to where every little tick looks like a big drop or rip. So if you go a little bit further out to the 5, that's when you can see more of the overall trend in the day. And so if I'm trading this one, I'm watching it open, flags a little on the 5 minute, and then pushes higher. But as you see from here and then here, it kind of extends away from the levels on the chart that we're looking at. So my base level that I start with is the 5 minute. But as things start to extend away and you can't really make heads or tails out of the action or the pattern, you can flip to the 1 minute and it will give you a little bit better of a breakdown of what's going on. Right out the gate, this was that first spike, which pushed straight up and then flagged sideways. As you see, there's a lot more detail that happens here in the 1 minute than the 5. As you see, it held roughly the 20 on the 1, held again. So if you go to the 1 minute, instead of that one huge big green candle that we saw, it looks a little bit closer and a little more detailed in the level that you can see that it either broke out of or rejected. So this is still the 1 minute. It was very tight here, and then it looks like the 1 minute's starting to fail through here, starting to pull back, starting to fail a pattern. But the longer term time frame still showed that pattern was still intact. So it came down to like the 9 EMA, the 20 EMA, and held and actually went higher. So this is a very volatile one to start with, really. But it kind of shows that, this specific candle here that we couldn't really get much detail on was a lot more detailed on the 1 minute when you could see the action, you could see the specific green candles that were sending it up here. And then this big green candle as well was actually several green candles that had lower wicks. You could see it getting bought up from the bottom here. And it wasn't just this big green candle except for this one. This was a huge green 1 minute candle. But besides that kind of helps break down the move. Now, if you go to something that's been running for a while, say like Veru, the 5 minute shows that, I'm sorry, it's zoomed way in here. The 5 minute, you can see trends overall, and this is multi-day now. This is going back to all the way from July 11th through July 15th, which was Friday. And it had a couple different moves. You can see how it kind of pulled down on the 5 minute here, continued through higher, pulled down here, had a pullback here. And then eventually it got smoother on the 5 minute and kind of stair-stepped its way up. But on one that's multi-day, it's a little easier when you back out a little bit. So let's say we back out to the 30 minute chart. And this is a lot of the time what I use when, let's say, Veru has ran the previous 2 days, and I want to see levels that it might pull back to, or that it might hold as support or show as resistance. So this is 30 minute candles each, and you can see like on July 11th, it popped and then pulled back to the 90 MA, even on a 30-minute chart, and continued higher. This day, it pulled back to the 50 SMA on the 30-minute chart and continued higher. So the longer the time frame that the stock's been running, the bigger time frames seem to work better overall. So you got your 30-minute, you can even pull out to your hourly and see that overall, I mean, it's been rough and it's had some chop, absolutely. But overall, the 60-minute, the hourly, has been trending higher and higher and higher. So if you're looking for an entry, say, for a swing entry, or trying to find an entry on something that's ran, from $10 to $17, it's not as helpful to use the 1 minute right now because it's so overextended. You want to use a longer time frame to try to find your true levels of support and resistance instead of short term. Now, if you're looking at this to just quick scalp, 1 minute's your friend. You go up to the 1 minute and you're watching like these single 1 minute candles. And when you see pullbacks on the one, you can exit and you buy back as it's continuing higher. So 1 minute is more of like a quick scalp. 5 minutes more of a day trade. I won't say long term, but you're holding for either high of day or you're holding for a pattern breakout. 1 minute is you're holding for like a couple candles, a couple minutes. You're trying to trade throughout a specific little burst here instead of holding for a longer term move. Now, if you look at even going back to the daily on VERU, the past few days it has trended, in past several days, it's been like a week now, it has trended up. And let's say you're trying to buy a position that seems somewhat safe on let's say the 12th. So the 5 minute and below is not really going to help you find the overall support on the stock on this specific move. But if you go out to say the hourly on July 12th, which was, where was that at? Right here. It came down to the 50 on the hourly. This was a level from around these wicks over here. It was a level that broke down here and then got back above here. So there was multiple levels, and I can even draw in a horizontal line. And this comes back to, supply and demand and all that stuff too. But the longer time frames help you see it a little bit better because this is 1 hour candles each. So this is a longer term setup, but you see even back here on July 6th, rejected. This was in after hours. It pushed through, but ended up the next day it was back below. It finally got through and had its run, and it came back to retest this line. So this goes back to, the trend line video that I created a couple weeks ago, or maybe it was a week ago, talking about trend lines and how trends hold. But this trend was a little easier to see on the 30-minute than going on, say, the 5 minute. So if you go on the 5 minute, and now I can't even go back that far, but you can see that from the 11th, it had some supply through here. It had some resistance, some action that it accumulated and then pushed higher, and that's the level it pulled to. But if you were on a longer time frame, you could see that, hey, this is not just a one-time thing. This has been, resistance, finally got through it, and then it came back to be support. So you can see more of the chart that way on the hourly than you could see, say, the 1 or the 5 minute. Let me look up what else has ran here recently. What about SIGA? Now this one is similar to VERU in the way that it moves. It's very volatile up or down. When you're watching the 1 minute on something like this and you're trading, so like this is the open, and the 1 minute just looks so choppy and it's so thin. And sure, if you're like a micro scalper, you can take advantage of these candles. But if you go out to say the 5 minute or the the 5 minute looks okay here. The 5 minute, once it got this out of its system, it kind of came back, held the level, and then went higher and higher on the 9 EMA all the way until it finally pulled back. Now this is a little bit of an outlier. This is kind of down to a demand level from before, and then continue higher. And this is a lower float, so it's a little hard to read. But as a multi-day runner, just like VERU, you could see these things. Let's go out to the hourly on this one. There's more rhyme or reason to the levels that this pulls back to. So even back to, this is late June, you have levels that it resisted off of and then came back, tested it, held, moved higher, moved a little bit higher. Later on, came back, tested the same level around 12, but held. So this is better for like maybe short-term swings, and that's harder in this market because this market is tough. I mean, not a whole lot goes higher, not a whole lot breaks out, not a whole lot follows through. But the longer the time frame, the stronger the move, the potential to swing the chart instead of actually just trying to quick scalp it or day trade it. But as you see, the levels created on the hourly at the beginning of the run ended up holding higher and higher and higher. Even though the chart in between was kind of ugly, these specific levels held and ended up going higher and higher. CLNN, I think, is another one that ran recently. Yeah, it had a run. Not as crazy, but on the 1 minute, that going back to that again, that's your quick scalps. That's your looking for, a couple candle move to get through and get out. So say like this candle here. It didn't have a lot of action. This is back on the 14th. It had a little bit of action below VWAP, not a whole lot, but you could see a pattern kind of forming here, an ascending triangle, if you will, and it finally broke out. And this would be the move you're looking for in the 1 minute. Like if you get this 332 to 340, 350 move, that if you're scalping on the 1 minute, that's the kind of move you're looking for. You're looking for that quick breakout out of pattern and get out. But say the same thing on the 5 minute. Let's see where we were here. Underneath the VWAP. See, it doesn't look as clean here. It was flagging under VWAP, yes, but you couldn't see that pattern forming. And it kind of helps to get a tighter look on the pattern sometimes, especially at the beginning of the day when the 5 minutes really haven't set up yet. But to help get a specific look at the pattern at under the microscope, I guess you could say. Look at a pattern. Let's see, where was it at? Right here. So yes, it's a little choppy, it's wicky, but you can see an ascending forming much easier here than you could on the 5 minute. So if the 5 minute looks extended, if it looks like the candles are kind of floating here, sometimes pull back to a lower time frame so you can see like, okay, this is actually forming a really nice ascending triangle right here to break out towards 350. Now, as this moves higher, you can look at the 1 minute, but the overall move ended up pulling back to the 5 minute chart, pulled back to the 20 on the 5. And overall, you could say, okay, yes, it pulled back all the way through here, but it looks worse on the specific levels. Like this 1 minute chart looks overall uglier as it's falling down through all these lines than the overall intraday trend that the 5 minute shows. So the 5 minute just shows kind of a pullback here to the 20, and then it swooped up. It never really had that like, oh, this is breaking through everything. It just pulled back to a specific level, showed consolidation, and moved higher. One thing I will say, and this is a little off topic, but it kind of makes sense to throw it in now, is the only indicator you will see that's the same on every time frame is VWAP. And that's my purple line here. So VWAP is the same on the 1 minute as it is the 5 minute, as it is the hourly. VWAP's always the same on every single time frame. Now, like the 20 EMA, the 9 EMA, the 50 SMA, the 200 SMA, they are all different on different time frames. Okay, so we can go on to another example. Let's go to a larger cap. Let's go to, like, say, Apple. Apple, and I know not a lot of you will scalp, Apple on the 1 minute, but it's possible. It's possible to even scalp larger caps on the 1 minute. So as you see, I mean, it looks a little choppier on the 1 minute, but you can see these little flags forming, or the 20 on the 1 holding here and pushing higher. And you can trade those moves based on the 1 minute. Like if, let's say, July 14th around 11:12, 11:13 a.m., it pulled down to the 20 on the 1 and then curled up. But if you go to the 5-minute chart, it looks very, very wicky in this range. It looks like, high wick up, high wick down, looks super wicky, but you can trade the patterns that are forming on the 1 minute chart throughout here. Now, if you go to, say, like a longer term time frame on Apple as well, you can see things holding up. Like it will hold the 20 on the 30, or the hourly chart will hold up higher, as this has been continuing higher throughout the days. And there's specific levels that it holds. Say, like this hourly candle closed here at 143. It closed under here at 143. And then once it finally got through, these candles right here held 143. So it's a case of, resistance becoming support. But the biggest difference on the time frames, in my opinion, are what you're looking to get out of it. So like I said earlier, for the 1 minute is more of a quicker scalp. The 5 minute is a day trade. That could be, 5, 10, 15 minutes up to 20, 30 minutes. 15 minute, maybe like an hour you're holding for. 30 minute and longer, I think, is more of like a multi-day move that you're looking at, like Veru or SIGA, or one of those that have ran for multiple days, so you can actually find levels to buy on the pullback that don't feel like an overextended move. Because, I mean, if you look at Veru, go back to Veru again, looking at it here, it was at $11. It's ran all the way to 17. So I feel like, I'm chasing, even on specific points here when it's not at 17 yet, you kind of feel like you're chasing through here, and you want to find a pullback on a longer term time frame. So 30 minute, 60 minute is the same as the hourly. You can find your longer term pullbacks on your multi-day moves. Now you can go even further out, and let's say you're in a stock that's finally breaking through its 52-week high, like Veru. You look at the daily levels and the weekly levels for your resistance after that. So let's say, this is breaking through its daily level. Where's your next daily level at? And of course, you've got a wick at 1855, probably 1850. So that's your next level. You got some action from there to, high 19s to 20. So you can use the daily chart to find your overall, bottom end or top end levels. On breakouts, you use them to find your top end, but on, say, like something that's been falling, and we had a good trade on this the other day because it went to a specific level, but like Redbox, you look at the daily, and I think we bought on this day right here, it had fallen from all the way from 18 to around $6-7, but it hammered back above and held the 50 on the daily, and that's the next day it ran and actually had a decent run. So the daily levels are, if something is long-term failing or long-term breaking out, you're looking for the levels to either, scale out. Where's the next level of resistance going to be? Where's our support going to be? Where are we going to end up bouncing? Now, Redbox since then has fell through here and then fell all the way back down, and it's coming up on another level in the daily that could hold. So as you see right here was some resistance at 4. When it broke down below 4. It flagged under 4, broke back through. So 4, this 4 level here could be a big level from 370-ish to 4. Could be your next big, buy potential bounce level on Redbox. So the daily will help with that. Now, I know a couple people will use the weekly for levels on, say, a runner that has been running recently. So go back to, say, CLNN, I think it was. And this is Zeus in the chat, he specifically, this is what I'm thinking of that he called and that he got in, is that, you know, CLNN at open on Friday, this looks like a death candle. This looks like, oh my gosh, this thing's dying. This looks bad. And of course, you have some, you know, looking back, you know, armchair quarterbacking. Looking back, you've got, I mean, this level right here that was resistance before that broke through. But looking at this candle at open, you just see, you know, this falling off. But he used the weekly chart. Oh, yeah, right here. So these two bodies right here were resistance on the weekly. So 370 to 380 level. And that is what he was looking at to buy the dip on this multi-day mover, was these two candles right here that were previous resistance come support. So using the week level, and you can see it had two bottom wicks here, broke below, then had resistance above. So it should come back testing, come back above. So that's one way you can use the weekly as well. So the weekly levels show support too. That's something I don't do very often, but I know Zeus and a few other people will use the weekly chart to buy dips on, say, like a multi-day mover. And normally I would think, okay, so this thing ran on Thursday. It kind of blew its top off here Thursday afternoon. And then Friday morning, they've already started selling off. It looks kind of ugly. Went down to the 200 on the 5 minute, which you would think would be, okay, this is bounce level. This is bounce level for open, logically. And they huge kill candle it. But it ends up holding, and you're like, oh my gosh, why did it hold this level? You can look over here, yes, but then you can also look at the past. You can look at the hourly. You can look at, or not the hourly, you can look at the weekly chart and see that those were specific levels that held on the weekly. Now looking back, I mean, it was some wicks through here, but the weekly showed the clearest levels for this specific chart. As you see it pull back to these levels right here and held. So different time frames can be useful in different ways. But the longer the time frame, the more, I would say, strength there would be to that level. So if you're looking at support on the 1 minute, it's going to have no bearing at all or even be close to the level of support that, say, like the weekly chart would have, and so on. But I showed you guys that, you know, the 1 minute for quick scalps, the 5s for day trades, the 15 would be, you know, maybe start looking for a dip for maybe an overnight, or start looking for a dip for, say, a multi-day mover that you guys want to try to get a position in, but you want your risk reward level lower. So you go further out to 15, 30, and 60-minute chart. But I hope I didn't ramble on too long. I wanted to make this quick lesson for you guys to help you out and help you know when I at least use different time frames to trade different levels for different stocks. So if you start, I always stay on the 5 minute when I'm day trading. I stay on the 5 minute constantly. If it gets overextended on the upside, I'll pull up the 1 minute to maybe see a quicker or a closer pattern that is forming, maybe that you can't see on the 5 minute yet, because the 5 minute candles really haven't caught up. And then I'll use like the 15 and the 30 minute to buy pullbacks on multi-day runners or like big movers that have, you know, like a T+2 move, when to buy those and when to look for continuation on those. But I hope this lesson helped, and I appreciate everybody watching this video, and I will see you guys back on stream Monday morning. Thanks.